It's time for On the Radar, when we ask an investing professional what he or she is looking at in today's markets. We're back with our guest host, Rob Tetro, Senior Portfolio Manager at Tetro Wealth Advisory at Canaccord Genuity. Rob, you say alternative assets may well be a good way to seek an inflation hedge. Tell us what you mean. Give us an example.
Well, here's the thing. Inflation, we've talked about it, Andy, and you know, we talk about it every day on the show and on the show, rightly so, because cost of goods are going up, cost of services are going up. So if to truly be a hedge against inflation, you want to own the other side of the trade. So what is CPI? What is the Consumer Price Index? Well, cost of shelter is about 30%, give or take, of the increase in CPI. So if you could own the other side of that trade, then you're in a good spot. So rent, right? Rent goes up, CPI goes up, rent goes up. So if you could be on the other side of that trade and own private multi-family real estate that's well diversified, that's in different markets, well, then you're actually participating in inflation if it happens. Because if inflation hits and it's 7, 8% and your portfolio does 4%, I don't need to tell you that that's not great, right? So the key with the private real estate is that you're going to participate in that. If rents go up 7, 8, 9, 10%, your NOI goes up, and then your multiple of NOI, which is the value of your private real estate, typically based on cap rates, will go up by that equivalent value.
NOI being net operating income?
Yes.
Okay. Now, but you're talking about private investments. So how does a person invest privately in a multifamily building?
So if you're doing this at home by yourself, you're probably not able to, and I can't speak much to that. But I know that for us at the Tetro Group and at Canaccord Genuity, we have access to private real estate through either third parties, either through limited partnerships, direct investment in deals, specific deals. Like, you know, in Winnipeg, we invested in the Pemby Hotel, a staple of Winnipeg for years and years. It was a hotel. There's a limited partnership group that came, bought it, tore it down, replaced it with 250 units, and my clients were able to participate in that. Now, that's one example, but they're also on-the-shelf kind of private REITs that exist where you can participate, and there's a whole bunch of them now in Canada. Now, you need to make sure that your portfolio manager, a guy like me or a gal, not a gal like me, but a guy like me, is actually monitoring this, doing the due diligence on the deal, and actually involved on the valuation. So I'm a big believer that should be a part of your portfolio. Another one is, you know, private infrastructure, music royalties. Those are all good inflation hedges.
It is interesting. We don't do enough on these alternative assets because they are fascinating. They offer advantages. But I always feel there's less public scrutiny. I mean, they don't have to produce quarterly reports, and at least you have portfolio managers and analysts reading those things. I always feel it's more opaque.
Yeah, but here's the thing, Andy. You need to own this asset class. If you're a Canadian, you're watching this right now, and you do not have alternative asset classes in your portfolio, you're lagging. You're lagging on a risk-adjusted basis. Every large investment fund in the planet, pension, endowment funds, they all have alternative assets. Canadians do not, unfortunately. And if you're watching this and you don't have any, you're lagging, unfortunately. It's going to produce better risk-adjusted returns with less volatility. Now, it's not just that you need to own it, but your point being less transparency, right? So then the point is you really need a good portfolio manager. You really need to have someone in your corner that's actually going through the statements, going through the financials, and making sure that this investment belongs in your portfolio. And I'm a true believer that that's where guys like me can add value. We're truly adding value because we're finding those asset classes that you can't buy on your own, and we're making sure that they're adding value to the portfolio.
How much would I need to invest in a private real estate building? Invest privately in a rent building? Sorry, go ahead.
Well, I would never do more than maybe 5% in one specific investment, right, of your portfolio, because you do want to have that diversification. But as an asset class, given where we are in the markets right now, 30 to 40%, let's say 20 to 40%. I don't know your personal situation, Andy, and I would want to KYC you, know your client, but I can guarantee you that, you know, someone roughly your age, 40 years old, give or take, should probably have a good 30 to 40% in their portfolio.
In private real estate?
In the alternative asset class, and that includes infrastructure, private equity, private real estate, music royalties, farmland, you name it, right?
And one thing I was curious, well, what does he think of cap REIT or the publicly traded rental REITs? But you say they are subject to general stock market risk.
Yeah, I mean, why are you buying real estate? To me, you're buying it because you want the consistent cash flow, the valuation that's normalized quarter over quarter, and you want less volatility. So, unfortunately, public REITs don't provide you with that. So, I prefer private REITs for the reason that the cash flow, the stable income, it's extremely tax efficient, and you don't have to worry about the volatility.